I would love to know where that money came from, but I'll just say that I'm very happy for the bondholders. I want the best for NCB. It's no secret we were buying NCB in the teens and 20s and sold at 200 for the most part in terms of significant holdings. I also think NCB is a very good example of what's possible in Jamaica. So I want the best for them. But it's no secret that there's a lot of distressed debt there that
Yeah.
they'll have to figure out. So
Hi, guys. My name is Thaon Simms, and welcome back to the Limitless podcast. Joining us, as always, is your co host, Dr. Matthew Preston. Hail up the people, Matthew.
Hey guys, what's good?
And now to our special guest, a regular on the show. It's been a while. Mr. Ryan Strachan. Welcome back.
big up. Good to be here with you guys again.
Man, the people's favorite guest.
I feel like we need to have him on once a year.
Yeah,
Once a year is cool.
you know? Yeah,
That's
at least.
It's the only interview I do in us, so we can make it work. Once a year is fine.
Hey, love that.
Awesome.
Yeah, man. I remember
I
one
don't
time
anymore.
we had, I was saying to Ryan off air that, you were one of our first guests ever on the podcast. This is from before we were even on YouTube. We did one of our first episodes to the early Limitless limit breakers out there, the early followers
OG.
with no Roman stocks. Yeah, the OGs with no Roman stocks. I think we did two
Part
episodes.
one and part two.
Yeah, part one and part
Crazy,
two.
Part one
right?
and part two.
I remember that
Yeah.
actually. That's a good night. We got to chat about a lot of stuff.
Enough things. That's the plan for tonight,
went on
right?
for a while.
Yeah, we should compare notes and see if any of it actually happened as opposed to what didn't happen. And that'd be
That's
cool.
true.
That's cool.
Yeah, that's true.
Yeah, that's
So
a
how you
different
been,
time,
Ryan?
no?
Yeah,
Been
how
good,
you
man.
been?
Been good, working hard. I left Grayscale, the capital. When I resigned September, left December, started business January, and been just a whirlwind since. A lot of travel, pursuing opportunities. I had a deal that was announced. I didn't really want it
You
announced.
said January. You said January of last year.
25. Yeah, 25.
Okay, just giving
25,
everybody
okay,
context.
okay.
Yeah.
Yeah, 25.
So just
Been
about a year now.
Yeah, about a year now. So yeah, a lot of travel, pursuing opportunities. I was saying what a deal that closed and was announced. I didn't really expect it to be announced, but if you bring in two PR companies together, of course, you're going to have a lot of noise around it. So should have expected
Truly.
that. But, there's a lot more I think will come out in the public much sooner than later. But I've been good, man. I've been very focused, very energized, and somehow working harder than ever. But I feel as though it's rewarding work. It always is. So grateful. Grateful.
And the acquisition you're talking about is one great studio buying DRT.
Buying DRT.
Okay.
Yeah. So that was a deal over the Jamaica Stock Exchange or through the Jamaica Stock Exchange as one great studio is listed. And what's interesting about it is the deal didn't really come together as I had imagined it. In fact, we're supposed to sell a division of DRT that then kind of went into an outright sale. And that's how deals are, right? You start out one way and then sometimes the scope can expand. So that's what happened with that. And they've been integrated since. But it was quite a thing, I must tell you, because that deal came together. I initially was trying to sell it to another player. And I think they made a bad decision in not buying what I was selling, but these things happen. And I ran into, eventually, I think a year later, I ran into Javane at a Super Bowl party. And it just occurred to me in the moment to ask him if, what was he thinking about? What do you think about this? And sent him, and we had a little casual chats over the year. Because I was at GK at the time. And almost like as I left, he called and said, "Listen, I think we should talk about this seriously." And we're closing 6 weeks.
That's
Start
fast.
to finish,
Okay.
closing 6 weeks. And then
that's
I was
quick.
like, at least it's good. it's good because at least people don't need to ask me anymore about what I'm doing. But as just like John Ostar, let's try to hold it down a little longer, But these things happen that way. So give thanks.
Yeah, we give thanks.
Give thanks.
I rate Danielle. I actually had a conversation with her. That's the CEO of DRT.
DRT.
She was telling me about that whole acquisition and her doing a lot of. I remember she said she was doing like a lot of work, and even on Christmas Day, she was sending Javane a bunch of stuff, and I could tell that she's very driven, like very, very, very driven.
And Danielle's a fighter.
Yeah,
she's very, she has good morals, I'd say, good values, and I really believe with the technical prowess she brings on that front facing side, that marketing, communications, PR, which are separate things. And then one great studio with all of their IT type prowess, web design, and just the whole works. A bunch of things I'll never understand this side of heaven. It's a really good match. You combine the technical with the flair of marketing and all that, and you have a really good team there. So I'm really excited about what they come up with. And it gives them diversity, They're no longer just focused on SEO type work, which is search engine optimization for people who may not know what SEO stands for, but now they offer a full suite of services. So we'll benefit them, I'm sure. Yeah, no
worries. So with DRT, I didn't even know they're the ones that do a lot of the prospectuses, because I was looking at even Woodcat's IPO prospectus, and I was just reading through it. I'm like, yo, it's an easy read still, like the document looked nice, it looks clean and so on. And then I found out that she's the one that did it. It's DRT. It came out of there, and then they also do a lot of other companies' PR and marketing and promotion. I remember she was telling me she did
Omni. I've seen them. Yeah, they do Omni.
She did. She was involved with
Spurtree. It's Spurtree.
Oh.
Yeah.
They did JFP, I think. I think they did JFP. I can't remember. Or is it Regency? It's one or two of them. I know they did 2 of the 3 deals.
I think she's even on the. Is she on the board for Spurtree?
She's on the board of Spurtree. Yeah, she's on Spurtree.
Oh, wow.
Yeah.
So she's making waves. She's doing her thing. I'm proud of her.
Yeah, proud of her too, man. Yeah, I rate that. Okay. So how's it been on that side now? Yeah, we should. We're good. But how's it been on that side now, where you're working? Yeah, growing the business, working for yourself.
The truth, like, I think it's kind of the same energy as I've been used to for the last, from my career started really in this business. Because, when you're in sales, I tell people that sales is a dead-end job, right? That's something Chris Berry says all the time, or would say in the office. If you're selling, like, there's no super salesman title, there's no master salesperson title you sell, and your success is entirely dependent on what you produce. Now, it so happens that for me, it was also my success, my earnings were also entirely dependent on what I produce as well. It would as fate would have it, I kind of got proficient at that selling thing and growing the business and securing deals. So I did stock brokerage work. Then I got into bonds. And stock brokerage, local and overseas, I should say. Then I got into bonds. And then it became a thing of investment banking, like the IPOs and the secondary market raises and the mergers and acquisitions and all that. So in essence, it became a whole suite of offerings. The point is, I've been doing that so long, and that's been my mindset. There's no difference in terms of doing it for others as opposed to doing it for myself. Because in the end, you're still executing a service for a client. Now, whether you find a client or the client comes to you or whatever the case is, you're still drawing on the same pool of skills. For me, it really became a monetary thing. Like, in a brokerage house, you share your revenues, as opposed to if you're on your own, you really keep all of it, especially on the investment banking side, which is kind of where I've focused on. So that's really all it was. So there hasn't really been an adjustment. I must say, though, the adjustment is not tied to the business. The adjustment, well, not tied to the day-to-day. The adjustment is now on the side of you you have your taxes, you're responsible for that. You have to hire people, you have to take care of everything related to the office, you have to have TCC, you have to get health insurance for people. So that's administrative stuff is kind of where now, you know, you have to find, you get the contracts. I can't just carry the contract when I sign it and give it to the VP of investment banking and then file it or them scan it or whatever. I have to do that and I have to have it in place. I have to make sure all my things trademarked. So those are the things that you kind of have to do, you know, as a business person, which I'd done some of it before because, you know, Sweat Equity is a 7-year-old company now, but we really hadn't been operating at a, you know, we hadn't done anything really till that first deal in January last year. You know, we hadn't done much. I don't use the company for much, but I still have to file annual returns and all of that. So I have an accountant. And yes, I mean, it's been, I tell you, for the person so inclined, it's good, you know, but it's not for everybody. But based on how I was operating, there was no other path. Like it only made sense that I go down this road because I was already doing all the work anyway. So may as well make a little more money doing it, you know.
Fair. No, that's so true.
No, that's true. That's true.
Yeah.
How big is the team?
Right now, it's just 3 of us. You know, I keep it lean, and I'm the only front-facing person because when you're talking about revenue generation, it's really, that's where it turns on. That's my responsibility. So I'm always open to adding persons, but they have to come in and generate revenue. I'm not interested in any analyst. I'm not interested in any trader or nothing like that. That, you know, because eventually, you know, when I can segue into this briefly, I think there's going to be some consolidation in the financial services sector. So I do believe there's going to be room for more acquisitions of some of the players. Angus Young spoke to it at the JC conference. I saw you guys were there.
Yeah.
Where some of the smaller players aren't going to be able to keep up with the regulatory expenses. So, you know, there is room for an acquisition in the future.
Starting to see some of that.
Yeah, man, of course.
Like with,
and there's going to be more.
JN.
Yeah,
you're going
JN is a big player.
JNFM got sold. You know, SSL collapsed. You have, I mean, just look at all the smaller players. I don't think they're growing their revenues at all. So that's just a matter of timing, I think.
Yeah.
I don't really think I don't see myself going into that, to be frank. But let's see. But the point though is that there's a general contraction of revenue generating capacity in the sector. Why is that? Chicken or egg? Is it talent? Is it practices? I don't know. But for me, trying to keep my expenses moderate, I would have to have somebody who says, listen, I can generate this, and they come in as like a partner, more so than they work for me. Because I learned a long time ago, I can outsource anything. You know, if I need legal work, I pay a lawyer. If I need help structuring something, well, it depends on what the thing is. If it don't make sense, in terms the money don't make sense to structure it, then I'm going to pass on the deal, right? So in that sense, I don't really need that. And that should inform how professionals go about their activities too, and the duties, because if you work in a brokerage house and you're just executing what a VP gives you, I don't know if that's really worth it.
Yeah.
You know, I mean, you're going to say to yourself, is that your career? You know, you're not going to grow much. And then if the business contracts and you're going to be limited. I mean, if you even become a CEO, you have to have a revenue generating ability, or else you're not going to be able to stand up on 2 feet for very long. You be at the mercy of others. So that's kind of why we've taken the approach. I mean, there's a hedge fund guy, I can close on this. In the US, I think he has like a $10 billion fund, 3 people. There's 3 of them. I mean, so I don't need a bag of people for now.
Yeah, I look at companies like even Epley, and Epley manages billions of dollars, billions of dollars, and they have a small team. It's less than 20 of them, and you know, it to me, it's just like you don't need a massive team. You don't need like, you know, once you have people that are doing the work and so on, yeah, you can't lose. On one of the points that you mentioned, though, I saw even today. I don't know if you've seen this Instagram post, but on the Central Bank of Jamaica, so the BOJ's Instagram post, they actually posted incorrect media reference. I don't know if I can share this so you guys, so the viewers can probably see. I'm gonna put it in the chat, Preston. So it's in the chat now, but it said incorrect media reference to Bank of Jamaica. A recent media report incorrectly stated that the BOJ has approved the acquisition of JN Fund Managers Limited by Barita Investments Limited. As the regulator of licensed deposit-taking institutions, BOJ has no responsibility for the approval of the stated transaction between the entities named in the media report. So I don't know why they, you know, maybe they're just stating that. Maybe they're distancing themselves from it. I don't really know. But I just found that interesting that you said that today, and I see this post today as well. So yeah, it's just, I don't know.
That's interesting. I don't know what's behind that, to be honest.
Yeah, not really
I don't
sure.
know.
I just like it.
Yeah,
I don't know.
but
But I know for sure there will be more consolidation, because I know, you know, if you do the mathematics, right? So these are the kind of conversations I have myself, by the way. Anyhow, if you do the mathematics, let's say somebody gives you $1 million US, okay, and the fee is 2%. Some is 1, some is 0.5, but 2% is, so that may be the standard rate in many circumstances. Just 20 grand, fair? Now, if you buy a bond with that, chances are you're not going to be able to trade that bond. Now, if it's a case where we're in an environment where interest rates are falling rapidly and prices are going up, you can trade the bond. So chances are that 20 grand or that million or that 980,000 could become more depending on how the price of the asset moves.
Mm-hmm.
But for all intents and purposes, it's a fixed income instrument. It's going to pay interest once, twice, or 4 times a year. And withholding tax comes out, so you probably make 5% on it. Fine? Cool, fine. That is how 95% or 99% of the industry earns this money. Apart from that, you have funds under management, you have unit trusts, there are collective investment schemes, and you have investment banking like your IPOs and your APOs and your rights issue. You do an APO rights issue, let's say the raise is $1 billion. You probably get a fee of 50 million. All right. Now, you can imagine if your expenses on a monthly basis are $10 million of payroll, to make 50, that's going to take you 9 months to close. You better have a hell of a pipeline.
Yeah.
Contrast that now. Let's say, for instance, they come to me, $1 million US in, you know, at Grace, for argument's sake, or wherever I worked in my time. Say $1 million, 20 grand, 980. Fine. Let's say we buy TransJamaica 2, whatever else, US stock, blah, blah. Eventually, that million could become 3, or 980,000 becomes 3. If we need to sell that 3 to do whatever, we have 60 grand in fees. Now we have 2.94 million. Okay. The client may say, well, they need something, but you know, they need to pull on, you know, $500,000 to go buy a house or whatever. No worries, they buy the house cash. We still earn more off that million and earn more off it more frequently than a bond trader would, because you don't necessarily buy bonds to trade. You will trade stocks. No, you may not trade stocks all the time, but you will trade stocks more often than you trade a bond.
True.
So that shows you how the equities business is a better earning business than anything else. The problem is most of these brokers do not trade retail equities. They trade for their unit trust. They trade for their mutual fund. They may trade for their prop account, none of which is a high fee earner relative to the assets under management. But none of them trade individual retail equities sufficiently to move the needle in terms of revenues.
That's
If you
true.
had 10 advisors, sorry about that, trading equities consistently for clients and getting new clients into their equities pool and driving retail relationships, I don't think as many of these brokers would be in the problems that they're in now.
So why do you think that is? Like, what do you think is causing that?
I think it's a knowledge gap. I think they just never started. I think, listen, most things in life is the people not doing it because they don't want to. You know, as I was saying, I had a meeting today. I said to a guy, listen, at one time, you know, central bank rates in Jamaica were 50%. So you have entire brokerage. Yeah, you have entire brokerage houses that, you know, especially the older ones who have built a business off spreads. The problem is when rates started to fall around the year 2009, that started to shift the dynamics. So you could trade the global bonds, right? Because the price were going like this, rates were coming down, so you could maneuver them. But what happens eventually is that you keep needing to find something else to put the money in. So they had a few years of feast, but then now October 2021, rates start to go up, price start to come down. After rates were held at 0% from about 2008, well, call it 13 years. The global rates were about 2000, near zero from 2008, where financial crisis to about 2021 October, which admittedly was 2 years later than there was a consensus for the actual increase to have begun. Now, COVID made it worse. COVID accelerated the rate of increase because that had to be known. That was a counter to the economic stimulation. In fact, it was only held any longer because of COVID. Like when COVID hit 2019 December or November, you remember at that point they were about to start cutting rates, but they had to hold it, and it got to a point where it was beginning now to become a problem in terms of inflation. They started to push rates up to kind of create a balance. But what that did, and if you look at a lot of the companies who have had issues in Jamaica now, you can pinpoint it to October 2021, where they had issues with debt financing, with refinancing of facilities. I think they couldn't pay with the higher interest rates anymore, and there were just general challenges. You know what I'm saying? And that's kind of that's the genesis of all of it.
I see.
So a lot of them were like highly leveraged.
Yeah, we've spoken about a few on the podcast too, like even NCB. Although NCB's problems were a bit before that, but it was also during that time where a lot of debt was due, and he tried to kick the can down the road. And look where we are now. I mean, granted, he's pulled the rabbit out the hat. That's something Preston and I were saying on the podcast. Like, he found the money, So, yes, you have about 200 mil left to find.
Still more money.
More money. Over time, there's still definitely more money. But he's found the money. So he's lived to see another day, which is, quite exciting to see on the market. Like, I love talking about things like this because to me it seems like a movie, like Succession or something. So yeah.
I would love to know where that money came from, but I'll just say that I'm very happy for the bondholders. I think an injection of 15 billion, it will go a long way to helping to make some people whole. So I'm very happy about that. I think there's a lot more to that story. But for me, I want the best for NCB. It's no secret we were buying NCB in the teens and 20s and sold at 200 for the most part in terms of significant holdings. And that was a very good, and that's not just me talking, and not for me, for clients. And I'm very happy about that because that opened or exposed or created new wealth for a lot of people. So I also think NCB is a very good example of what's possible in Jamaica. So I want the best for them. But it's no secret that there's a lot of distressed debt there that they'll have to figure out. So let's see how it goes. With the ownership level anyway. I'm not aware of the operating entity.
So what do you think made you sell back then when it was around 200?
200.
Can I tell you? We had profits of about 900%. At that level, you're looking for a reason to sell, right? You're not really, you can't really get greedy and be like, you need a reason to stay as opposed to selling. I remember we had a lot, like we had about 1 million units to sell. So
Wow.
I sold because I heard about the commercial banking ratios being a little off. And I said, I'm going to come out of this. That's all. I mean, granted, we bought Sagicor and Scotia and we lost some of it, but nevertheless, we're still operating from a much higher base, and then we still preserved it because then we went into TransJamaica and made a mint there and blah, 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 blah. So it wasn't all lost, but it's still a lot different if you're dealing with a person who started with like 20 grand and they now have 200,000 as a result of one stock,
Yeah.
So that was the thinking behind it. Nothing else. That's as simple as that. Nothing else.
Okay.
Yeah.
I'm sure it sounds like if someone was just to come to investing now and they've been hearing about all of this NCB stuff and you would tell them, at one point NCB was $200 and people were probably even saying, certain people were saying, it was probably undervalued then. And they're saying, it was going to go to 250, it's going to go to 300. That probably sounds crazy to that person now. But it's so different when you're actually there.
Yeah.
Yeah, that's the thing. When you're there, it's different.
Yeah, but when you have proceeds and cash in it, it's a lot. It's a different dynamic. And I actually thought it was going to like $1,000 because my belief was they were eventually going to list on a foreign market. But when I started to hear about the ratios and all that, I said, well, if it goes to 1,000, great, but it's going to have to miss me because I can't afford to have all these people lose out on the profits they have made having diligently invested in it. This was like 2015. 2015, and we sold in like 2019. 4 years prior. We just couldn't take that chance, to be honest. So that's really all it was. I mean, it was no complication. I had to sit down and do no analysis past that point because in the end, like, you can do all the analysis, but you're still gonna have to wait to see what the results come out looking like. I was very bullish on the Guardian acquisition. One of the things, though, and I'll say this, based on how banks report their financials, it is extremely difficult to value them because you can see the cash in a bank account on the balance sheet and all but then is what's treasury cash as opposed to what is client holdings, client deposits. Well, it's not always as simple to figure it out. And there's actually something that somebody pointed me to. The Deutsche Bank is trading at book value now for the first time since 2008. So now you can't even say globally that all financial institutions trade at book value, so you can then apply that to Jamaica because you just can't. So maybe the standard could be, well, banks should trade at 50 cents to the book value, to every dollar book value. We don't know, like half the book value. So because of all of that and the lack of familiarity for me, it was very easy to come out profitable. Very, very easy.
Yeah. I love that jumping into something different mentality. Like, all right, you have the cash now. Where am I going to put the cash? And you're looking at different things because, no one could have predicted COVID at that time. That's just a black swan event. So, yes, buying Scotia. And, I still really like Scotia as a stock. Buying Scotia to me also makes sense. Sagicor as well. I get it. And even Scotia, after COVID, after the initial dip, it still did a run up. It was like $30 at one point and then ran up to like 60 and so on. Strong profits, great company. I think pretty well managed. And I get you with that the consolidation. I think it can happen and it will happen. I'm even trying to think of even smaller players. I don't know much about them, but even like a like a credit union, fund management, and so on, or even I look at even a brokerage house like MVL. I mean, I like MVL personally. They're old school, small. They do what they do very well in terms of stock brokerage. That's what they do, and they're good at it, and so on. But I I start to think of what are the institutions now that may not have, a brokerage license or so on, and would they be willing to buy them? Would they be acquired? I don't know. I mean, I know Scotia has Scotia Investments, but I don't know. I just look at different players and say, all right, how likely is this target for different entities? So we'll see. We will see. I mean, a lot can
It sounds
happen
like you
in
should
that
come into
space.
my business line, man. You're thinking like somebody who's serious about, about this thing. Well, that's the truth. I think that's the way you should think about it. I think that is where the value is created and extracted. If you can see something like that and then find a solution, you're in good shape. Trust me, you're in good shape.
Oh, maybe I should quit my day
You're in
job.
good shape. No, don't.
Are you hiring, Ryan?
You guys good. You
Jokes.
guys good, man. You'll be all right. You'll be more than fine. Well, no, I think
have my employers
there's
hearing that.
there's some good stuff happening, and you rightly said. I think MVL is a long-standing player. Perhaps not. Maybe I don't, but maybe not as. And I don't know if they're trying to grow right now, but who knows? I mean, I know for sure a lot of people have looked at them. I haven't, but a lot of people have looked at them. And if you have an avenue to steer resources to a company, then go for it, man. To run business to a company, because that's all it turns on. Are you able to deliver enough revenue generation, and you want to get paid for it? That's all. It's good business.
Yeah, good
Stock
business.
brokerage, best business, best cost efficient business. And you had to ask me why I don't think more people do it. I think it takes a lot to get comfortable with. It's one thing to take 100,000 Jamaican dollars and bet on a stock. It's another thing to take 100,000 US to bet on a stock in the US market.
One Trump tweet and that gone.
I remember when COVID came, I went by my mother's house to see. I don't know why I was there, but I had to go. I don't remember what it was. I went to go see her, I think, and I'm on the couch and I'm looking at the screen, and the market was down 1,000 points, and I was looking there, and I couldn't find words, and my stomach was churning, and I was just like, all right, cool.
Jeez.
And then another day came, same thing. And my mother was like, you all right? It's like, I will be, but right now, it's not a good time,
Yeah.
And, we held through it, bought stuff, whatever, and the market is probably up double since that, So, these things, it's a gut check. And I tell you something, not one client called me. Nobody called. They never called in a panic. I think because I've done a fair enough job of client education.
Yeah.
So they know
crucial
what the market is about, what the drivers are. They know what my thinking is. So they don't really call to be like, Brian, what's the story, brother? They never did that. But I don't think everybody has the stomach for that. And the thing is, if you don't start, you won't get somewhere. And you have to have the knack for it as well. At the end of the day, I've been doing this for 16 years. I've been in the stock business for 16 years. I've been in the US market for 15 years. Not many people have that. In Jamaica, especially, not many people have that.
Yeah, that's a lot of experience for you. Yeah.
I've been trading securities, talking to clients.
So it's very fast paced. Like I opened up an account recently. It's just there's so much information,
Yeah, I've been managing client relationships, I've seen clients Nah, I mean, I had a client from he was in his mid-40s. Now he's about to retire. I mean, we took that portfolio from, I want to say, 100 grand or 150,000 to like 1.7. No, I mean, you have to understand, this is not 1.7 they put down. So that makes a difference to a person. If it was 1.7 down, that's a different story, because that means you haven't grown that individual's money in 15 years or 14 years. But, you know, the fact that you've created value where none existed. Now, even if he says, thank you, Ryan, sell everything and pay me out. Of course. Because it still would have been a lot more than what he started with.
Yeah.
You know, and not everybody has that stomach for it, man. Like, I mean, we bought Google heavily, and Google grew 60% last year. And I say these things publicly because people say, oh, you're lying, or as young people today say, you're capping. So that's why I tweeted or documented. I'm like, no, you see where I said it's unsellable. And we open the position, so you can't say I'm lying. It's right there. You know, when we bought that company in infrastructure, I can never remember the name. The ticker is HEES, because we sold Caterpillar for profit. And Caterpillar done amazing, by the way, since then. But we bought back some and sold. Anyhow, we bought in the 40s, site language. It felt like high 30s. Did not, because we liked infrastructure. 22s, a company Hertz spin-off, bought it. After they initially been bought out, they bought them out at like $91. So we effectively doubled the position in 18 months. It wasn't expected.
Wow.
It wasn't expected. So that's what, you know, that's what I've always done in a nutshell. And it's kind of worked out. So I'm grateful for that.
What do you like? What do you like about Google? Like, what were some of the reasons around you buying it?
Google. Well, YouTube, largest music player in the world. I like the core business, you know, advertising, AdWords, Google Chrome. They have in a nutshell, they have a very tightly woven ecosystem that is not based around any physical product. It's not like Apple, and I'm a full Apple person, except Apple Watches. I have iPhone, iPad, MacBook, AirPods, the whole 9 yards, right? And I've been plugged in for 10 years, and I don't see how I'm going to come out. But Google, the thing with Google is they dominate eyeballs, in my view. And the fact that Google has even become like a verb, like I'm going to Google it or whatever. That's you know, people say it and they don't realize.
Says I'm going to Bing it or I'm going to Yahoo
exactly.
it.
Yeah.
Or like, look, back in the day, they'd say there's Ask Jeeves, and all. That was like late 90s. I mean, nobody's going to say those things. And then no, to top it off, whenever AI was the talk of the town, and everybody was saying, Jono, Google is going to be left behind in AI. Then they introduced Gemini, which is already built into Chrome, and in a sense takes advantage of the existing customer base, right? Those things made it a no-brainer. Now, when they beat the antitrust case, when people thought they were going to have to sell Google Chrome or whatever, and they don't have to do that just further convinced me. So we went into that head first, man. Sorry. We went into that head first. Like, we dove in. You know, I think went overweight. I think we took 12.5% to 15% of any portfolio in Google at like $160, you know. And I mean, we've been buying it over the years, but just a new position that, you know, because we'd sold a few times, practically and whatever.
And to put that into context, Google is today $345.
Yeah, $345. So it's really been, we are more heavily exposed to Google than even Facebook. And we bought back into Facebook at like $650. Saw it slide. I don't really like the AI expenditure, but have to live with it. And it's done well. I can't complain. It's done well.
Yeah. I think for my US account, the first, well, I only own one stock or one share, and that one share is Google. So I opened it up last year. I think for me, there are a lot of the same reasons that you're talking about, but in terms of like my understanding of like AI and large language models and things like that, I think that because Google has YouTube, and then YouTube is basically what the largest database of videos, and they also have a lot of text because people don't realize that YouTube videos automatically give you transcripts, so they have tons of that data, and I think that's gonna help them to leverage their like their models. So that's why, like, you know, you're seeing Gemini performing so well, and then they also even have what's it called, TPUs, which help like train the models, and then they own a large stake in my, I guess, personal favorite large language model, which is Claude, which is owned by Anthropic. I think Google owns like a 15% stake in Anthropic. And when you, I guess when I've done, I mean, Anthropic isn't public yet, but in terms of my understanding of the business model, like they are kind of different than like an open AI. So they push, like, you know how open AI is very, I think OpenAI has about like 900 million users. So there's a lot of retail people. Anthropic, yes, they do have retail people, but it's way, way, way less. They are very heavy business or enterprise AI, which I think is really what is gonna, you know, move the needle. So then when I was looking at that, I was like, wait, I'm heavily using this product, I'm loving Claude. Here's a way that I can get exposure through Google, and then I love YouTube. YouTube is like my favorite social media platform. So I think, to me, I mean, I bought it recently still, so I don't think I've seen that much gain, but I guess we'll see there. I think there's more to come.
Yeah, man, futures bright. Futures bright.
Yeah, I think Google is gonna win the AI race for sure, because even Gemini being in the Google suite of stuff. I remember I was telling my friend, I had a task at work to do, to, you know, make a table of some data and so on, and then I just pull up Google Sheets because everybody was wondering. I'm the tech guy at work, apparently. You know, I'm the IT guy and the tech guy that just knows random stuff. But I use AI for a lot of the stuff. So I went into Google Sheets. Gemini is in Google Sheets. I asked Gemini to create all of these things, then create a dashboard for it with charts and all of that. I just did it. And I'm just like, yo, Google just leveled up because Gemini isn't all of their things. And so it's hard not to use Google's products now. You see, when Microsoft started, you know, asking to charge for, they started charging for like Microsoft Word, their whole suite, you know, Excel and so on, and then Google having all those things free, it, to me, it just shifted the users. Like, you see a lot more users using now all of Google's products and Google Suite instead of Microsoft Suite. So I don't have Microsoft Word. I don't pay for any of Microsoft stuff anymore. You know, I just use Google Suite. And I pay for Google stuff like the storage and so on, because I'm just so embedded in everything that they do. So I just think that they're gonna win the AI race, and I love their tools. They have a lot of free, really good tools out there. Notebook and LM, Nano Banana, like they're building huge Opus. They're building huge things. So yeah, Opal. Sorry. Yeah.
You sure you guys are just doctors, though? Because you seem pretty steeped in tech.
Yeah, man. Tech is the future still, you know. We dabble.
That's cool, man. That's good. That's good.
Because we see applications in medicine too for a lot of the things. So yeah.
It's interesting, you know, because I actually think you're going to start to see tech and a few other industries overlap much sooner than later. You know, as you rightly said, I do think in the medical sciences for sure. But I have long said that I believe fintech is going to actually become a thing, and not just how people speak about it now. So I do see even further automation coming to finance. I just don't know how they're going to capture the lending process. That's the only part I'm not so sure about yet. And then I do see media and technology. I mean, already you're seeing Facebook, Google, all of them with the advertising. They're cramping traditional media. So that's going to continue to force consolidation there. So I think those three areas for sure are going to have serious overlaps. And so when I hear, you know, a lot of talk around AI, and I think you guys are spot on, what I believe is going to manifest itself even more in these spaces than it has already, because it has quite a strong presence in this already. I can tell you, in the US business, we don't, there's only a trader. That's it. There's nobody else. Settlement is instant. Withdraw the statements from an online app. That's it.
Wow.
Right? You just enter your trade and that's all you do. The analysis is where the margin is. Which is why I had said for professionals, you need to consider where you find yourselves in the industry. Because if you don't find a way to get yourself where the margins are, your job is not going to be around much longer. Because in the US business, they have eliminated the role of a settlement officer. They have eliminated the role of an operations officer. The only people needed is the advisor and the trader, if they're not the same person. That's it. That's it. And I'm pretty sure Jamaica may get there once they get the systems to a point.
I agree. I think it's just a matter of time. Like, people think AI won't be, well, you know, there's a divide. Like, people that are like, oh, it's too far out to replace jobs and so on. But personally, I have seen jobs have been replaced slowly. It may take some time in Jamaica, but in the US, right? I'm seeing jobs. I mean, unemployment rates are going up. It's harder now as a university graduate to get those entry level jobs, because a lot of those, unless you have those skills and can use a lot of the AI tools and so on, one person can do the job of 3 people now. So why hire 3 different people to create graphics if I can get one person that can create graphics but utilize AI tools to help them create graphics so they churn it out at a much faster rate? You know, it's a very competitive landscape, and I think if you don't evolve, even as a financial institution, if you're not evolving, you die. You have to keep up with trends, or the company will just get left by the wayside. So, or be acquired.
And you know what's interesting as well is that this development in the US has been so for 12 years. No, I'm lying. I've experienced this for the last, since 2017. It's 9 years ago. So I guess where I'm going with it is, I think there'll be some disruption or displacement, but I think there's been a consideration of the expense profile of a lot of these companies for a long time now.
Yeah.
So in a sense, I think it's going to now come to what can practically be replaced and when. I don't know if it's going to be everything. We'll see. You know, I think, you know, if it's seamless, I think once it doesn't involve engagement with humans, it's going to go one way or the other. It's just going to go. You know, I mean, as a customer, I don't like calling a bank and talking to a machine. Like, I hate it. I mean, if it's to retrieve a statement or something, fine. But like, if my lawyer called me this morning, I want to talk to a person. So there are some elements that I think will remain. That's my bet. But some, if they haven't gone yet, are gonna go. I just don't know a lot of these industries well enough to be able to identify where. But the thread I see that's common is, if it comes to processing, I see that being automated.
Yeah.
For sure. Right. It's just a matter. But the automation has to be justified by volume. In other words, it can't just be, oh, well, I'm going to create this process to offset. That's going to be an expensive capital expenditure to replace 5 jobs that are low paying, relatively speaking.
Yeah.
Really. They're not going to move the needle. Because I'm going to say, well, I'm not paying $1 million US to save myself 200,000 Jamaican a month, though I'll never have to employ these people again. It don't make sense. You know what I mean? In preferred carry on, which kind of goes into what I want to speak about this weekend, because I figure you guys, this won't come out till my email is out.
Yeah, it won't.
Where we're seeing Jamaica now in manufacturing, a lot of the players with cash are using their capital to buy new equipment, which in a sense is automation, right? It's just Is artificial art is AI in a sense, maybe not the way people have come to appreciate it, but it's automation. It's replacing manual labor with a machine, right? And the machine is programmed to execute a particular task. They do it. So what's happening now? All of these manufacturers are changing their machines from being manually reliant to being driven by human instructions. We see it with Wysinco. Their plant, $7 billion. They probably employed 200 people at most for it, or 80 people. Unheard of. That kind of capex in the past would not have 80 people. I want to get the exact number because I want to be faithful to that log. Last time is doing a bottling plant, right? AMG is doing a whole new upgrade. Minimal. Wysinco's 85 direct production role, 200 in indirect role, sales, distribution, marketing.
Yeah.
For a $7 billion spend. That's unheard of.
Yeah.
You could never.
I'm looking at it now. Yeah, this is massive.
You could never. So what they're doing now is, and we're going to see more of it, is that as they grow, they're now becoming more efficient in the delivery of their products or the manufacturing their products. I know you only have human beings on the sales end, relationship management, stuff like that. But what goes into processing is all automation.
Yeah.
That is where
I know you're a big manufacturing bull. Like you're very bullish on manufacturing in Jamaica.
I mean, that's where the money is.
Yeah. I'm impressed with this plan still, and you're right. It's the companies that have the cash. Wysinco had the cash on hand, and they're just like, well, I was just gonna finance this, and look at them now.
Efficiency begets efficiency. So they have cash because they were efficient, and the next step up in the pursuit of efficiency comes from more efficiency. That's really all it is. AMG, same thing. I mean, AMG is not a popular business, but they still do $1 billion top line, 100 million bottom line. I don't know if 5 listed companies have margins of 10%, like that, net margin.
Oh, net profit.
Net margin.
Yeah, we were talking
Not
about
many.
AMG. I have not looked at AMG now. It's been.
I know that they had. I remember I was looking at them because they had brought on. There was the guy from, I think he used to work with First Rock Simplad. Like he started up like some advisory firm, and then he partnered with them. I remember looking on them back then.
Yeah,
I was like, this looks like this is a turn. Yeah.
Oh, Chris Young.
This looks like this is a turnaround.
I don't know the genesis of that whole thing, but if that's attributable to them, which it may very well have been, full credit. But that expansion is going to be next level for them. But the point is, and I mean, going into it much further in the email, which is already drafted, by the way, I just need to send it, which is unusual because normally many times this thing get drafted on a Thursday or a Friday. But in fact, I've even drafted next week's already. It's just sitting in my drafts. Where I'm going with it is the pursuit of efficiency, artificial intelligence, automation, all that is not. I said to people, it's not a separate exercise. It's all part of one thing. And I think AI has been present for a while, it's just that people didn't acknowledge it because there wasn't a term for it. But inputting instruction in the machine as opposed to talking to some tough-head person in your production floor, and tough-head means stubborn. And that's for any area of life where it's not specific to any strata of the society. It's much easier because the machine now got talk back to you. The machine not when you're sick. I'm very sympathetic of human needs because I am one. But if you're talking about production, exercise, there's still different levers. And by virtue of that, there are different challenges, but there are also different benefits that come with either. And I guess people will say, listen, I don't care how my product gets made. Yeah. I just want it. And if there's no difference there, then we're not going to be too bothered about how it's made. We want to be socially responsible, but we want to make sure it's made or produced as cost efficiently as possible. You know what I'm saying? And that's kind of how I expect further advances to be made in light of this artificial intelligence age.
I was looking on the AMG thing. Let me share my screen. So there was this article. I think this was one of the ones I saw. This was October 2024. So they were saying offering way more. This is Jamaica Observer, offering way more than advice. Simple advisors set sights on business. So they were signing, I guess, the deal with AMG. So that was late 2024. And then another article came out. This is February 2025. So about a year ago, I didn't know about this. Targets, or I don't remember this, targets tenfold increase in production. They quote the chairman, Metro Siago, about like saying that they're upgrading their equipment. That is actually quite the tenfold.
Yeah, that's mad.
Wow.
I remember their expansion plan was to double revenue to 2 billion by next year, I believe, and they have some
next year, as in
2027. And they have, I think, they got new machinery. Let me see if I can find it.
So they were saying about a corrugator.
I think they've identified it.
Yeah, their targets, I think, are to get it this quarter of this year. So Q1 of 2026.
When was that said? That was said.
I wonder if I can
find financial
it.
Or?
Yeah, it's a new. It's a gluer. Let me see if I can find it.
This was at the shareholder meeting. I wish they recorded this, I really wish more companies did that. Or streamed it.
See here. This is a July 2025 article.
Send it to me in the chat.
Yeah, and I see by 2026. I've seen 2 articles. Let me see if I can send both in the chat. Sending one right now.
It sound like AMG is one of your stocks to watch, Ryan.
Absolutely.
Hey, name manufacturing,
Yes, absolutely. I think manufacturing is a very good area to look at locally. Very important area. Not the only one, but I understand it now. I don't really, as I said, I don't understand banking like that. But I like manufacturing. I like energy. I like infrastructure. That's an infrastructure. Energy technically would be an infrastructure.
Yeah.
That's what I like for now. That changes. And in terms of JSC, I like technology too. Anything with bona fide technology will catch my eye. Bona fide, like tech done well, not the weak, the half-baked technology, like real value added technology will always catch my eye. As far as buying the Googles and all that to the world, because I'm a tech guy. I'm not a techie. I'm a tech investor. Though. That's the difference. I'm not a tech. Trust me. I'm not awful, but I'm not with it like that. Like I don't know how to do these Instagram videos and I don't use TikTok. I'm not the guy. Like I can't be bothered to learn because it's like, all right, do I take the 10 minutes to go learn this thing? Or do I take 10 minutes and read some stuff online? You know what I'm saying?
Yeah,
so that for me is the difference.
Yeah. I don't know if I sent you some of the articles that I was finding, but in the article Preston, I don't know if you can share. Yeah, there's a July 23, 2025 one. Not the recent one that I sent you, but the other one. It says in one of the paragraphs, and they were talking about the specialists being brought in to recommend any upgrades to the corrugator that will help maintain efficiencies and qualities. Same efficiencies we're talking. This is that same article, but a little bit further down. And then if you scroll down even further, he said, meanwhile, the semi-automated gluer set to replace a manual system will be commissioned in the first quarter of 2026. Employees will be retrained to operate the new system as part of the company's transition to more modern operations. So, yeah, I mean, big up Ryan always, and I'm pretty sure all our viewers are bigging up Ryan because I love hearing about stocks that no one is really talking about or so on. And I like boring companies. Me personally, I was talking to my friend about Woodcat's IPO today because today's their opening date. We're recording this February 2. And they were like, yo, it's a boring business. And I'm like, but once that business kind of simple to understand and so on, it makes me feel way more comfortable investing it. If I can understand the business model, see how they're making their money, it's nothing too complex and I have to think and some calculations and gymnastics and you don't really understand. Nah, I don't really invest in companies I don't understand. But like these boring companies, and then when they say they're doing things like when you hear buzzwords like tenfold, yeah, I definitely am gonna take a much deeper look into AMG for
Let me
sure.
tell you. So let me tell you something about Jamaica as I've observed it. So you're looking like manufacturing sector. A lot of it was bedeviled. Like a lot of these guys, they make good money, but what it is, they could make a lot more. But Jamaica was really at one time a getting by type society where people have like old machines and them run it down to the ground, but they wouldn't buy new ones because they couldn't go to the bank for capital. So then them scrape and hustle money from like friends and family or whatever. But it would put a ceiling on any business. Advent of junior market made capital a commodity that could be accessed to make capital accessible. So it would allow people to retool, and by virtue of that, as they grew, they could retool and retool and retool. Now, there's a couple of stages in the manufacturing sector as I've observed it. There's one, your product is accepted, you start to be profitable, and you get to a point with it. That's part one. Part two, you start to replace some imports. Stage three, I should say, so stage one, stage three is when local players begin to dominate supermarket shelves. And imports are really not the mainstay they used to be. We're there now with like beverages.
That's true.
We're there now with pepper and sauces. We've always been there with poultry because of protectionism. But we're getting there now with manufacturing of other things. So boxes are dominated by Domrep. But as AMG expands and has these new machines, they can now do what they're doing now faster and potentially go after import substitution. Now, mark you, I've been saying this for years. It's not a new thing.
Yeah.
Right? So that's what you're now seeing with Lasco with this new bottling line. So when Lasco went into beverages and Wisinko was always in beverages, when I was younger, the supermarket shelves looked a lot different because all the beverages were overseas for the most part, or from Trinidad or wherever. Now, you may have some Trinidad ones, but you have a lot more local beverages on the shelves. That's a major difference that I've observed over time as a byproduct. You know?
Yeah.
So that's the difference. And that's what I think will be a hallmark of this new wave. And bear in mind, all these companies I'm telling you about have already listed, because the reason why at one time all the big companies in Jamaica were foreign owned because they had capital from foreign sources. The minute you brought capital into local hands through the stock markets, which is why I say to people, this market should be encouraged. They shouldn't be beating down people. Obviously, you want to protect the integrity of it. So if you have scammers and criminals, you want people to know that this is not legit, but that's part of a market. Like, it will always be there.
Yeah.
You know, Elizabeth Holmes was on the cover of Forbes in the US and they said she was worth 10 billion. So it's not like you're going to have a world where there will be people who have adverse motives. Nevertheless, you still have to protect the mechanism because the broader good is so much greater than the minority headache that some people provide, right? Because it has given these companies the opportunity to expand. No, the problem we have now is succession planning. That's a global issue.
Yeah.
All these companies, they don't have, because they're founder-led, they don't have people who are going to come in and take over. That's another problem. But despite that, we'll cross that bridge eventually. I mean, that's what people like me, we get to play in the game, in the fields, right? Because we get to help. We get to help people with succession issues and whatever, mergers and blah blah. And I'm working on a couple now.
Nice.
But past that, the the opportunity is there now to see companies flourish and for investors to buy into them early. So like you, I like boring businesses. And listen, it's all about incorporating what you hear, what you know. The government said, listen, we need to address the energy grid in Jamaica. Is there an energy player? Perhaps what I'm doing is a good one? Because they've said it, like they've already said it. So you're going to wait for an announcement to come that, oh, well, where XYZ is going to do ABC. No, you have to hear, infer, and take a shot, because at least now with the public markets, you don't need to wait anymore.
Yeah, that's true.
You need to wait.
I'm not sure.
Right there.
I'm not sure if you're. Oh, you said okay, public markets. I don't know if you. At first, I thought you were alluding to another energy player that is listed. But yeah,
there's three of them, right? There's WIC Terminal. There is Energy IEG, which is a Siboney reverse merger. There's JPS 9. There's all the JPS pref shares. I think that's it for now.
Yeah, I guess you have Wigton too.
Yeah, Wigton. I forgot about that. Yeah, I forgot about
that. Yeah, Wigton and Wigton had already tell us what them going to do, and them already win the bid and everything.
So they've been, I'm a bit disappointed. Like I feel like they've been delayed with that. I even see the other person that won their bid. I think I've seen they're not a public company. Was it
Terra?
Sun Terra with their Midnight Sun project. I think I've been seeing stuff about them getting the financing, saying the cost and those stuff. And I think that was even a few months ago, like maybe 3 months ago.
Yeah.
I mean, in the end, that's what it's all about, right? Like you have to take what is in the public space, compare it to what's publicly listed. Is there an opportunity for me to get in before anybody else notices? And if there is, you jump at it.
Yeah.
That's kind of how I think investing goes. And in a small country, you have to be even more willing to do that, because there's only so many shares. Not everything is going to be like TransJamaican where you can get the world, and you have to just go buy it.
Yeah.
I'm a bit worried about how Wigton is going to finance it. So I think that's my hesitation with Wigton. That's my hesitation.
Wigton, I actually don't know much about Wigton, so I'm not qualified to speak about them. And I think WIC Terminal is not giving you the exposure, because that's more of a storage business. Or RPL, my goodness, Regency. I did the IPO and forget about them.
You did RPL, that's the crazy part.
I forgot about them. No, serious. Actually, I didn't even remember them.
Yeah.
They're another one.
Was that the last company GK did when you were at GK?
Yeah, with the one trade. APO.
The APO.
NCB put out something and that cost me 1.8 billion of subscriptions. So I'm very annoyed about that.
Yeah.
I was pissed about that, actually. But anyway.
Yeah,
so I had to use my phone.
I haven't seen GK do anything since. So, I look at that. Since you left, where are the deals?
I don't know.
Ryan, you couldn't leave some deals for them.
I don't know. Like, I don't think I left any there. I'm sorry, guys. So, I have a business to run, man. I have a business to run. So, Regents, 1-3 was, actually, if they could get that capital, that would be, and that's something I'm working on, not afraid to say. They got that capital, I think they be TransJamaica part 2, because their expense profile is the same. But TransJamaica had a good broker who got them the debt to Jamaican dollar debt to clear the US debt, and in turn got them the capital from the IPO to square off the debt. And that was a very good deal. NCB did very well with that, to their credit, because that, and it goes to show, even though that was a high quality deal, the market didn't catch on to it for a long time. People were actually saying TransJamaica's IPO flopped. If you remember, if you cast your mind back to then, and that was about probably 5-6 years ago, right? Going there.
That was early
20.
2020.
And people completely missed it if you think about it, because they were fixated on, oh, it didn't run up. And it's only when the first dividend payment came out and the yield was 6%, and they're like, then the price start move a little bit.
Yeah.
And then it went to like a high, like $2.20, then it came out like $1.80. And that's when I bought for myself and I bought for others, and we just bought, we couldn't just kept buying. And it's still never caught on, and then it would have paid a dividend, and then the price run and it start come down a little bit, and it's only now, and up to the other day it dipped again, and it was like 360, and like we bought wholly for people, and then now it just kind of was there at 4, and it was at language at 4 for a while. I just like went to 5, and once it broke 5, it just never stopped. And when I knew it was serious, it was trading volumes at 650.
Yeah, volume, some heavy
10
volume.
10 million units in a day. 12 million units in a day.
Yeah.
And that's when it said to me, this is gone. It's gone now. And so what I'm worried with it is, you can't use how how the market responds to an issue at the outset. That's why I still think there's a deal there for 138, because they could miss TransJamaica for so long, and people are saying flatline. I mean, but we'd have to get the check. We couldn't risk. We're not coming to the market. We want one investor to take on, the equity to clear the debt, and then that'll be the offer. We're not coming back to the market, because people don't get it, and if they miss TransJamaica, chances are they would miss anything else. So I can't trust general sentiment, and that's fine. I mean, infrastructure isn't for everybody, and I mean, student housing is big business. So that's the other thing too, right? Like, if you're going to make a difference and make money in the market, you have to be willing to do what others aren't willing to go where others are not willing to go. If all of you are going in the same direction, you're just going to be average. I only got recency because I got the call the Friday. I booked my hotel in Mobay for the Monday, Tuesday. I asked Andrew, I said, yo, when are you available? And I'm only telling the story because he told it without naming me. And he says, yeah, I'll be around Tuesday. I said, all right, I'm coming to see you at 3 o'clock. Get down there at 3 o'clock. I don't know the man from nowhere. Somebody call me with the deal. Go down there, meet him, chat. I brought the mandate documents to him too. I pressure my IB team. I say, yo, I need mandate documents for this. No. Go down there, leave them with him. He sent them to me the Friday.
Oh, that's quick.
He came and signed, I think, the next Friday. Like, we did the ceremonial signing at the office. That's a picture that's online. I was in the papers. And we did that IPO from that day to the listing in 6 months. And had it not been for some little delays with some asset thing, it would have been 4 months.
Wow.
And I said to you, I drive down to South from town as a VP to do all of that. There's brokers in the West,
Yeah.
None of them find themselves there. So I had to do it in the dead of night and don't say nothing to nobody, because I don't want them know that I am going for this thing. So maybe them vex when them hear I get it, but I ain't in the business at that point. It's my deal. So
Andrew look like a serious man, like a very, very serious man. Yeah,
business. To be on a business, my good guy. Andrew,
I rate the fact that he does even investor briefings and things like that, and
they take their investor relations really seriously.
Yeah, I love that. I love that with CEOs. That's
Earnings
what I know.
Calls, investor briefings, AGMs, all of them streamed. They answer the questions. Big them up.
Love companies like that and CEOs like that.
You have to take it seriously. You have to. Yeah. I think people underestimate the value of communicating with the markets. It is a tremendously powerful thing to do that. And I think people say, oh, well, it's only because Jamaica is not worth it. But I say, you think the NYSE is 100 years older than NASDAQ, okay?
Yeah.
More than like, and NASDAQ is now bigger than the NYC because it's growing by virtual listing. But I said to people, do you think the practices on the NYC and NASDAQ with the earnings call analyst estimates, you think it came together overnight? It was through establishing and creating a culture that then became the norm. But it's not going to become the norm overnight. So people need to stick with these things locally and make it become a thing. And if people don't want to adhere to the standard, then they get left behind. So one of the only reasons I'd be interested in buying a brokerage house is to instill that kind of practice. Because it's not that expensive. Like these enlisted entities.
Yeah, especially with tech nowadays.
Yeah, they waste money on marketing, which for most of them doesn't serve the purpose or it's not done well enough. Right? I remember, I said to people, there's no better marketing for a listed company than actually being listed, because any release you put on the stock exchange for free has to be publicized. Right?
That's so
it
true.
has to be. We sing goes in the papers with the commission in their plant. That sends word to investors. Right? And they don't need to pay any money for it to come in the papers because it's of public interest. It was in the news for a week across all media houses.
Yeah, it was everywhere.
I remember
who knew about Woodcats before the IPO? Yeah, man, who knew about Woodcats before the IPO? I mean, I knew about it because I knew their man bought it. Public disclosure. But it wasn't, more people know about it. No, I have random people asking me about Woodcats now. I don't know, spend only for money on marketing, they spend some. But going public has carried them a lot further than anything else they could do.
Exactly. Look at the amount of clients I could probably get. Look at the amount of investor. That's the thing. You're right. Listing itself is just it's a big marketing stunt, because your financials are open. Everyone can see it. That the transparency is there, and so on. Deals must
shareholders
be
can
lining
even be customers.
Yeah.
It's big business, man. It's good business.
Excellent.
It's good business. So, I mean, as I said, for Woodcats, I mean, it seems the top line has slowed. Bottom line is growing. So I'd be interested in seeing what the margins come out like. There was an ad with this chick talking about it. First time I seen her, but it was good. It's good to see.
It's like a TikTok kind of vibe.
Yeah, TikTok.
Yeah. I know exactly. Yeah.
I don't know.
That was really good.
It's always good to see people talk about financial literacy. And it's important because it's the only way more people are going to grow and grow their resources. You know what I'm saying? It's the only way.
Yeah. I'm trying to find. Oh, see it here? Cody is her name? I'm literally looking
with
at
a K, right? Yeah.
Kodianity. Yeah, that's her. I'm trying not to butcher her. Wow, she has a ton of 62K followers on TikTok. Sorry, guys. You guys, I don't even use TikTok, so I don't really know. But yeah, her video was very, very well done. Yeah, I thought it was fun. It carried you through the entire business. The editing was excellent. Like, I thought it was good. But yeah, that's the stuff I love. I love that. If it gets younger people into investing, that's why we do it. That's what we're here for. Just more people in the market.
That's why I do it.
Making money.
Information is everything. Once people have information, they can act. I think most people don't act. They want to talk. They prefer to go to a class or something. I'm not knocking it, but at some point you have to take the plunge. There's nothing wrong with a class. I don't teach them, but then the day you have to, I can teach you how to drive a car, but you at some point have to jump behind the wheel and drive the blow car. That's just how it goes. The same with investing. Nothing pleases me more than seeing investors go from having a cursory knowledge to actually becoming like really proficient and accustomed and comfortable with the art of investing, because you kind of have to view Jamaica as a whole. You can't just view it as in silos, like, oh, it's just this company or this sector or whatever, because at the end of the day, like, one of the better practitioners of valuation, of business valuation, the world to me, his name is Professor Damador, and I don't remember his first name. He would always say, you can't have a company that outpaces the economy for a sustained period. It cannot grow 50% indefinitely while the economy is growing at 2% or 1.5. And I said to people, in viewing Jamaica as a much larger thing, you have to consider a lot of the land. We're seeing the value unlocked in real estate. Signals with Lakespen, that's a 50-odd acre development. And at one time, that would have been that land, as flat as it is, would have been considered a distressed asset. Wasinka sits on like 100 acres by Lakespen, but they've been there for years. What would that look like with revalued? Caramed's $40 million US warehouse is by Bernal Lodge, which is a stone's throw from Lakespen, and you can see it when you're driving in the highway going towards Old Harbour on the left, or like Clarendon. And then now you have Fair Pen, which is where you have that massive industrial development going on, and Raintree Commercial Complex by Caymanas. Those lands may not have been able, well, Fair Pen, you could have gotten it for cheap, for nothing back in the day before the infrastructure went up. Caymanas may not have been readily sold because it's owned by the UDC, but what they're able now to create in terms of value through the infrastructure investment as a whole is significant now. Where does that fit in the picture, right? You have manufacturing being moved outside of Kingston, so you can look at any manufacturer and probably bet that they're going to be now relocating outside of Kingston.
Yeah.
Right? So that's one way we're seeing value unlocked. But there's so many other ways, because even manufacturing, there's a whole art of expansion, new machines, upgrading the AI offerings, etc., etc. So that's the kind of thinking I think should inform investing. And I think as well, that's how I think a lot of people miss it. And that's how I think, like, as I was saying at the outset, that's the creation of value. So if Signal sells off Lakespen, which I'm sure they will, it'll be very successful and profitable based on the fact that they were probably able to get the land cost efficiently, as opposed to what the surrounding lands will cost when it's finished. Now that is creating outsized value in an area where there was none or minimal before. On the back end, you go to the island, the end of the island that was destroyed because of Melissa, like Summer St. Elizabeth, Westmoreland, Summer Westmoreland. Well, all of Westmoreland, really. Well, a lot of Westmoreland, not all of it.
Yeah.
The underdeveloped elements, if built properly, rebuilt properly, will become much greater value contributors than they would have been had they remained as is, from the standpoint of the road infrastructure, which is going to have to be revamped, standpoint of the municipal infrastructure, like, in Black River being redesigned and rebuilt, blah, 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 blah. So that in a ways should shape how I think investors look at whatever they're assessing now from a buying standpoint. You get your asset cheap, you enhance the value of it, the overall outcome is positive, and it creates enhanced earnings. That's really what, pleases me most, and how I think people should consider this whole investing thing.
Yeah, you're right. I mean, I'm looking at now the Cygnus acquisition, and Cygnus breaking ground. This is a press release, December 9, 2025, on Lakespen Industrial Park and so on. And the company that deals, that broke ground, Cygnus Real Estate Finance Limited, which is SRF, it's listed. That's the beautiful part about the market. And imagine them taking profits off of something like this. What does that mean for SRF? It has not traded even close to IPO levels. What kind of dividends can we expect from companies like that when they do start to sell pieces and so on? It's a massive. This is literally 55 acres is huge.
Yeah,
so,
it's huge. And there's demand. There's demand for it.
Exactly.
Because and it says no, like, what were the places? So, because if it's not as simple as just relocating them, because if you have a manufacturing facility, you're going to probably have trailers and all that on the road, so it mash up the roads, right? But they're sharing a space with, so the roads are not built to accommodate trailers. That's the first thing. So an industrial complex would be different.
Yeah.
Right? The roads will be built a certain way, so they wouldn't deteriorate as quickly as civilian roads. That's the first thing. So one, you won't have trailers on narrow roads. Two, the roads won't be destroyed as much. Three, if the factories or that was the areas formerly used as factories were sold, what will those particular zones know? What will that land be used for? If warehouses are now on Spanish Town Road and going towards Caymanas, and the ports are close enough, then what is the internal part of Kingston going to look like in light of that? Will there be more residential opportunities? I don't know. Because a lot, this is not uptown. We're talking like half a tree, crossroads, whatever. Will there be more, what will the new buyers or the new owners of those properties do with them? What we know for sure is that it will create new value. And as you had rightly said, all of these things we're speaking about are being executed by companies that have access capital through the stock exchange and are listed. And as such, I much prefer entities like that than commercial banks, because while some commercial banks or financial groups may aid in these companies going to market, the capital came from the public. So I would more look at who is receiving the capital and who would have been the avenue for the capital getting to them, or the vessel for the capital getting to them.
Yeah. This
So
Lakespen project looks so
quite
nice. Yeah, it's quite a thing. Because even I'm looking at it now, Lakespen Industrial Park spans 55.4 acres with 46.4 acres available for sale across 34 service lots ranging from 1 to 3 acres each. I mean, and then it talks about, development targets significant market demand with an appetite for over 1 million square feet of logistics and warehouse space. And when I think about where Jamaica is heading, especially as a logistics hub, there's need for those kind of, areas. And I can even think about, what's the benefit of having spaces like that? And suppose I was to buy something like that. Like I think of myself as an investor, and I had this space and so on. Like, how could I sell this even better? Do I fix up the roads, as you say? Do I turn that land into a special economic zone, and then it has that tax benefit and so on, and then that's value add, so I can sell that at a premium. You start to think about all the things you can do with that space, because there's an appetite for that. And I think for Jamaica specifically, and where we are in the Caribbean and so on, we need more of that. I think the Prime Minister even said it too. Like, manufacturing is one avenue, logistics is also a huge avenue, and a huge avenue for us to grow. So I don't know. I see a lot of value creation in that space. A lot of value creation in that space.
A ton. But that's where the real money is, no? I mean, Kingston Wharves as another infrastructure, is a quintessential value creation opportunity.
Facts.
That has been explored.
In cargo handlers.
Yeah. That is the quintessential value creation that we, I think has been overlooked, because people have been used to it for so long. In the same infrastructure, in the same logistics space. And the good thing with logistics, nobody can just take it up one day and move with it. So, it may be the part of your portfolio you just have and you just sit on it, but it's going to grow as a country grow. So I think, these things speak well of the future of Jamaica. So that's the foundation of my investment thesis. I think, as I was saying to some guys, but I'll caution locals and say foreigners are going to come into the space more furiously. They just don't have an avenue yet. right?
Mm-hmm.
For me, I have deals, so I'm working a few deals. Locals, I've seen them, flop them. So if foreigners take them, well, I have no concern with who are vexed or who get hurt, feelings hurt because of it, because they would have seen it first. But the truth is, investment as a whole is not a localized. It's not a localized practice. It's a global practice. It's a global thing. So people are going to jump at opportunities wherever they are. They have concerns now about South Latin America because of questionable activity. Source of funds is a thing. I have always said I believe Jamaica is going to be the next frontier. We can absorb billion-dollar projects. To fix sewage in downtown Kingston from the infrastructure standpoint is $1 billion US. We will not have the 20-foot story buildings until we fix that sewage issue and replace all of those pipes. So by virtue of that, a foreign infrastructure fund could come and invest in downtown Kingston and get that off the ground.
Is that
Literally.
the whole? That's not Soapberry.
No, Soapberry is which was part foreign, by the way, at the time. But Soapberry is more St. Catharines. So Soapberry, which is full now, so it needs to be expanded. Soapberry is what has led to all of this expansion that you see in St. Catherine, Bernard Lodge, Portmore. All of that expansion you're seeing now is a direct result of Soapberry because of the sewage treatment capacity. So a guy in the water space, friend of mine, said to me, that is in his view, the most important development in Jamaica in the last 20 years. I mean, I can't think of the junior market, but that's undeniable what that has done. And these are the things that happen in Jamaica all the time, and people just don't know. And if you tell them, they're not going to believe you anyway, because the importance of it is lost on them.
You mentioned the junior markets. What are your thoughts on the micro market? I think the minister the last time set out, what was the deadline? Was it April?
April of this year, she said.
April this year? Wow, that's quite soon. We're in February now.
Let me tell you, anything that's going to drive capital cannot hurt. I will always have favor with me, because money in my bank account that's doing nothing doesn't benefit the country to the extent it stays in my bank account. My money leaving my bank account and going into a productive venture benefits a lot more people. And for too long, we've been a country of savers. And you see now, invest in tech route now, but now we need to push that forward. So to the extent, I can tell you this story. So when we're doing Spurtree, which was my deal, I mean, I want to say my deal. I think a lot of people may think, oh, I worked on it. No. It took me 10 years to get the Spurtree IPO from conception to actual deal.
Wow.
I knew the people, or I called the people. I built a relationship, we get along well. Me and some of them fall out fine, not the ones you see, but other persons. And that deal was Ryan strong. There's no question. So when I say it's my deal, that's what I mean. When we're doing the raise for them, there were a series of transactions before. I won't get into specifics of it. But if you look at the shareholder list at the time of the IPO, some of that you'd consider as private equity, right? Now, those persons, just by virtue of it listing from when they had put money in, would have made multiples on their cash in Spurtree. The thing is, though, the capital, so I'm a capital markets advocate. I would describe myself as that. I'm not a retail investor advocate or institution. I'm a capital markets advocate. Because capital markets create wealth. Equity capital markets create wealth. Okay? Had there been a micro market at the time, as Spurtree could have said, we need $10 million so we can go from a blender, right, to have a little office and produce these products.
Yeah.
You may have found Spurtree would have been able to come to market 5 years earlier. Maybe not because they got the capital eventually, but you ask yourself, how many other spur trees are out there that would need $10 million to propel themselves forward?
That's true.
So the micro market is great because it gives more of these companies the opportunity. You might put 50 grand in a company in a micro market, and by the time they go on the junior market, it worth 10 million. Because you're literally getting the opportunity to be an early stage investor. So a micro market cannot hurt. You can only win from that, because you're thinking about it. You lose a 50 grand. I mean, all right, well, it's not like, they're not me, I'm not saying me in general. Like $50,000 does not go as far as it could. I mean, I'm not going to say you want to throw away money, but you could lend your cousin and him dash you the money, and you can't find him, or you can't follow up with him because it's your family, right? Or you can take it by, 4 tire, put in a taxi for somebody, and the man crash the car, and then you have the same issue as well. So it's still an avenue for wealth creation.
And I think with stocks, it's hard to just lose that 50 grand. Like you see the price going down, there are times where you can sell or so on. So it's not like you lose all of it. If you want to sell 10% down, you sell.
Yeah, exactly. Stock market is, the day I heard of the stock market and I realized what it was love at first sight. Because I cannot believe there's a vehicle to make money. Nobody needs to know I have a stake in this thing if I'm not in the top 10. And all of these people work for me, and I don't need to know them. I don't need to listen to their problems.
Amen.
And I can just be passive.
Yeah.
And what's better? I don't know what's better. Some people would say they want to wake up 8 o'clock every morning and sweat up and all that. That's great. Got more power to you.
Yeah.
But for my capital, if that can work for me while I work on other things, it's nothing better, man. If you make money once, it's only if you're fool, you're going to lose everything, and there's not many fools out there. So, I think I welcome the steps. I think it's, and I mean, everybody knows where I am politically, but, the government, Jamaica Labour Party introduced the stock market, introduced the junior stock market, introduced all the divestments you see. I know about to introduce the micro market. It's just consistent with with the party's ideology. It's simple as that. It's in down to brass tacks. That's the reality. It's not me being political, but TransJamaican divestment, Wigton divestment, Mavis Bank, NCB, Carib Cement, and several others I can't remember. All done by JLP. So it's not coincidental. It's just standard practice.
Yeah. Yeah. Okay.
It's just standard practice over 60 years. So you go.
Real. Yeah. Okay. Anything you want to leave the people with? I don't know if you want to plug Sweat Equity, anything like that, because you're getting deals. Deals are coming to you. There are probably some business owners out there that need access to capital, maybe thinking of listing or so on, and they want to probably reach out to you. I don't know if you want to leave anything with the people.
Not really. For me, I think I'm easily found. If a person need to fire me, they know how to fire me. It's not difficult. And I'm always open to conversations. If I think we have, enough experience to be able to be of assistance, especially in that equity sell side business. So I'll say, info at sweatequityholdings.com is the email. Twitter is my main social media. It's just 5 Soleil, but like 5 number 5 SOLAE. But really and truly, like, you email me, chances are I respond in 10 minutes. I'll see it instantly, unless I'm in a meeting. But for me, the only thing I want to leave the people is take your financial future seriously. Invest in what you understand. Speak to licensed advisors, but test them by their knowledge. And really buy into Jamaica. Jamaica, I would not want a Jamaican to lose out on what's going to manifest over the next 15 years. And it's a hard stop in 15 years. And we're going to see the benefits every year for the next 15 years. minimum.
Yeah.
In fact, maybe more, because crime is disappearing before our eyes. So
That's
I
true.
say the time is to know to invest in Jamaica and to take advantage of some of the opportunities that listed companies present,
Yeah.
and not just the mature industries like financial services, but to really look at what's driving value in the society. And that would be my parting words. You know, I really believe that Jamaica is the investment frontier of choice, and I would not want people to miss out and to have foreigners make all the money. Like, locals can buy Benz too, and fancy this and live where they want and whatever from investing in the markets. And the guy can close on this. There's a famous artist who painted a mural for Facebook, and his fee would have been like 10 grand. And he was like, listen, waive the fee, just give me stock. They weren't listed yet. And the stock was worth like $100 million a few years ago. I don't know if he sold it or what, by virtue of doing that for Facebook. I'm saying to you, if we as a country can produce multiple Olympic champions from one era, just because two men, first starting with Stephen Francis MVP, and then Glenn Mills though Glenn is older than, I don't know what the point is with racers. If two men took a sector, you have to treat track and field as a sector that was small, but we'd had success. I mean, we were punching above our weight anyway. But through the creation of a system, we're able to push that success from here through the roof. So it's not that the overall thing is growing up, but their private vehicle has created national success in this thing. So now that the national administration needs to catch up, another story. But private enterprise, private vehicle, that is MVP and racers, have pushed this thing through the roof and created financial wherewithal for themselves, their athletes, whatever. How much more can that be replicated in business? Because we have the most stars per capita in the world. We do it in music too. Why not business? Like Jamaica has minted 2 billionaires, Leachin and Sanders, the Stewart family.
Adam, the Stewarts,
That Jamaica's done that. And it wasn't as vibrant economically then as it is now. So I'm beginning to say, well, that's scratching the surface. You're going to make we've seen Spaniards come in and do well in the hotel space because they brought capital. Now we have capital through the public markets. So why not use this capital to support the growth in the public markets? So make them and private capital compete, but at least we will have a lot of skin in the game. Man buy them stock at 50 cents and it gone at $10 and them sit down on it. Like, what's wrong with that? You know what I mean? Sure, make foreigners come in and do their thing. When Ray and Evie them come buy Red Stripe, man sit down on Red Stripe and buying it from $2 and $1. And then get offered 25 cents US or $32 US. Jamaican.
Yeah, Jamaican.
But him sit down and him ownership of the local brewery. And I said to people, I man, when I said, John, you know, I have $1 million and I'm only put on 100,000. But we'll make 1.6 still. But we could have make $30 million. You want to live with that?
Yeah,
that's facts.
You want to live with that thing in your mind like, John, I didn't miss out, star. Look, money never bother me neither, but I lose it. You don't want to lose out on that. So that's my message to people, to take the opportunities as presented seriously. I'm not presenting a ton of opportunities, but there are a lot of people who are sharing things, and you guys are doing a good job of sharing your ideas and your thoughts. I think I've shared a few of mine, and whoever else out there is doing their thing as well. But nevertheless, take all that information and do something with something that's going to actually be worth something in the near future. And that would be more than enough for me. Trust me.
Wow.
Hearing that to read it up today's word. Amen.
Drops mic.
Yo.
Ryan,
Good
it's
chat to
What a
always
you
way
a
to
guys,
end
man.
it. What a way to
always a
end it.
pleasure. Always a pleasure.
Big
Guys,
up.
if you love this episode, please hit that subscribe button, right? Like it, share it with a friend. You don't know. Thank you so much again, Ryan, for being on the show. And Limit Breakers out.
Peace.